Here are 3 reasons why you should have some exposure to international investing in your portfolio. Let's understand. First, dollar appreciation. Dollar's been appreciating versus the rupee at an average 3% each year for years together. In 2007-8, rupee was at 40, today it is at 84. So when you do global investing, you invest in dollar, and if your investment earns 12%, in rupee term, you make 15% of returns, which is a huge advantage of international investing. Second, themes. Let's say you are very bullish on AI. Then you will not get that kind of exposure by investing in India stocks, and you will have to do US investing. Let's say you are bullish on EV. You will have to invest in China because you might not get that kind of exposure by investing in India for the EV theme. Third, diversification. In the short term specifically, let's say election in India is resulting in softer performance of stock markets. In the last 3 months, India has done only 3% positive returns, whereas US is 6% and China has delivered 12%. So when you do international investing, in the short term, it helps you in diversification. Where and how to invest internationally, I have mentioned a detailed note in the caption. Thank you so much.